Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is December 3rd, 2018. Gotta give a shout out to my main man, Chaos, in the Webbot rooms. He wanted me to play that big crit, Mount Olympus. Nice joint right here. I ain't even heard this one, bro. Thanks for the song request. What's good, people? Hope you guys are all right today. Yeah, we took another leg down. We broke that resistance or that trend line I had drawn. So we broke through that, and we took another leg down. We'll talk about that in a second. But first, I want you to get over to cryptoblood.io. If you're still looking to sign up, you surely can. BitMEX automated trading bot system, plug and play. We're up 240% now, back to 240% for sure. You'll see in a second, we went short prior to breaking that line, so you'll see that in a minute. But yeah, check it out, cryptoblood.io. the link is in the description below. But today, guys, we're going to be talking about two articles that I did find, one being about Bitcoin's hash rate dropping, or it's not hash rate, but more so its difficulty rate dropping, the second largest it has ever done in history, the mining difficulty rate. We'll talk about that. You know, I got to give a shout out to Kukuza. He's in my trading room and he's in the Webbot room, longtime Webbot room supporter. He sent this, and you know, it just reminded me, like, I forget to really talk about the mining aspect of Bitcoin, because that part of it is really important. It really is, and it's not covered that much. So we're gonna take a look at that and see what's going on there. And then the second article, guys, is about Bitcoin, blockchain jobs, and the boom in industry, or demand for this industry is like at a 18-month high. And I said this once on a off the chain live stream that I do occasionally on the weekends, but I said, you know, at this point, if you really want to be about cryptocurrencies, blockchain, and you really want to make money, the money is really going to be in you actually getting in the industry, getting a job if that's where your strong suit is, or starting a business in blockchain. So that's where if you get in the ground level, learn the community, learn the industry, you're going to be very happy in 5 to 10 years for sure. Not only investing, I think investing in Bitcoin and some of these tokens and coins will be fine as well, but long term, you'll get more out of investing in yourself, building up the skills to learn how to really be valuable in the blockchain industry, you know, by going to work for someone or starting your own business. So we'll definitely take a look at this article about that blockchain job boom going on. But let's go ahead and take a look at the market cap. We're down greatly from yesterday. Just yesterday we were at 136 billion. Now we know it, and maybe you don't know, but the market cap is not dollar for dollar. So if we drop 11 billion since yesterday, $11 billion did not just leave the market cap. It's probably 50 to 100x multiple on that. So just keep that in mind. But Bitcoin's dominance was at 53%, almost 54, creeping up a little bit there. You know, I said, hey, we need to stay above this area. And I guess I didn't save this, but if you draw this line, I'll redraw it here. I said yesterday we would have to make a decision by the 18th, and we made that decision before the 18th at this point. So we broke down below that, and you see right when we broke it, it took a hard acceleration downward. We went short, as you can see here with that red arrow. That's where we went short in the trading room. So we're in a nice position there. If I do this, we're up almost 8% on that short. So that's 8% on whatever you leveraged. So if you leverage 10 grand, that's 800 bucks. If you leverage 20 grand, that's 1600. You get the picture with the BitMEX trading. But yeah, so at this point, in my opinion, I think, you know, we may take a rest here and maybe touch that. So now, you know, that line is definitely a resistance area, and this line is too. This line is a resistance area as well, but I don't think we're going to jump that high. We may see a Bart Simpson, I don't know, but that's where we are right now, guys, with the markets, technically speaking. First article out of CCN, and it's about Bitcoin mining difficulty just saw its second largest drop in history. The crypto market's prolonged decline has finally begun to manifest in its Bitcoin mining industry, which had at times seemed impervious to falling prices, but is now experiencing a moderate exodus. At a basic level, miners produce Bitcoin blocks by competing to solve complex mathematical problems. When the hash rate increases, blocks are found more quickly, while the converse occurs when the hash rate declines. To maintain a consistent block time of 10 minutes, Bitcoin automatically adjusts the difficulty of these problems at roughly 2-week intervals to account for new machines entering or exiting the market. And that's what the difficulty rate is, guys. For years, the difficulty has almost exclusively increased as a general price uptrend coupled with rapid advancements in mining technologies has resulted in sustained hash rate growth, even during periods of negative market trajectory. However, nearly 1 year into a bear market that has seen the Bitcoin price fall more than 16 grand from its all-time high, that is no longer the truth. As CCN reported, the Bitcoin hash rate has been in decline since mid-October as falling prices hastened the rate at which older miner models became obsolete and profit-driven firms at the margins began to turn off their machines to avoid operating at a loss. One estimate pegs the average cost of producing a new unit of BTC at around $4,500 a mark. BTC has generally traded below since November 20th, though the hash rate began to decline about 1 month prior to that. This minor exodus is now being reflected in Bitcoin's network difficulty, which fell by more than 15% following a regular difficulty adjustment that occurred earlier today. According to data compiled by XDX chief analyst Fernando Ulrich, this constitutes the second largest difficulty drop in Bitcoin's decade-long history and the largest since November 1st of 2011, when the difficulty dropped by 18%. So here's the breakdown of that. He's always giving great stats to look at when it comes to cryptos and stuff. So wow, we're second highest now. I was gonna say, I thought I remembered seeing one period where it dropped very low earlier in the days, but I wasn't in 2011, into 2012. Early 2013 is when I got in. I don't know if this was it, the December 27th. I don't know. But back then I was mining, so I was paying attention to this stuff a lot more than I am today. But I do want to highlight this for you guys because this is important. This is part of the Bitcoin economic model, or Bitcoin economics, if you want to just label it that. Like, so you have to look at this type of stuff and just keep up with it. You don't have to look at it every day, because again, the difficulty rate adjusts every 2 weeks, but just to have an understanding of what's going on, and maybe you can use this information in making decisions or coming to conclusions about where price can go in the future. It says here, today's difficulty rate adjustment marks the second consecutive decrease, with the difficulty dropping by 7.3% on November 18th. That decline was notable in its own right, as it marked the largest decrease in around 6 years and currently ranks at the 10th largest drop overall. Prior to November 18th, the last time the difficulty drop was on July 15th, and such decreases have been a rare occurrence over the past several years. At a present value of 37.7 exahashes per second, the BTC hash rate is down 39% from the single day high of 61.9 exahashes per second it set in late August. It is also down approximately 31% from the weekly average peak it set on October 1st. So it goes on to say here, beginning of a death spiral or a healthy development. Bitcoin bears such as Santa Clara University professor of finance allege that this recent decline indicates that the market has entered a death spiral. So the argument goes, Bitcoin derives its value from the cost of mining. However, eToro senior market analyst said recently that this recent hash rate decline is a healthy market development given the parabolic rate at which it grew over the previous 12 months, even as prices plunged. Bitcoin's hash rate has indeed dropped in the last few weeks, but this is not all that concerning. Greenspan said. It's actually comforting as the rate has risen so sharply over the course of the year and is now returning to normalized levels. So yeah, what do you guys think? Is this a death spiral or is this a healthy move backwards? You know, it is a little concerning. I think more than anything, I don't think it's a death spiral, but what I think it does for me, it shows me that we are truly going to be in a extended bear market. It's not going to be, you know, I was talking to, I think, I forgot who it was in my comments, but I'm like, yo, don't compare 2017 to what we have now and what 19 will be. It ain't going to be that. It's structurally, it's just different. So, you know, right now is a good time to really take your time, use money that is discretionary, and just buy Bitcoin and the coins that you truly have done your research on. Not that someone else has told you about, but you've done your research on, you feel comfortable about. Load the boat on those over you're gonna have some time. You're gonna have some time for sure. You know, I just did a video yesterday talking about Bitcoin's price prediction for a decade from now, and this one analyst, and I agree with him. You know, I see Bitcoin being 20x higher than where it is today. So if you're just slowly, you know, building your portfolio over the next 10 years, I'm not saying it's going to take that long at all. I think it's going to take way less time than that to kind of get this thing moving again. But you'll have a period here, if you haven't been yet accumulating more coins, you'll have a period for the next year and a half to really get your portfolio where you want it to be in the crypto space. So I don't think it's a death spiral. I think it's somewhat of a healthy development. I guess what I take away from this article is that this is structurally slowing down the hype over Bitcoin. So it's going to take, it's going to take more time. This is not like just a correction and then boom, we're right back. No, this is going to be some time to build a base at these levels and slowly build from here. So you guys let me know your thoughts about that though in the comments below. Second article out of Bitcoinist. Bitcoin blockchain jobs openings are booming, hitting 18-month highs. Bitcoin and blockchain jobs industry is booming despite price deflation, a new survey from Glassdoor has revealed. It says here, the findings, which originally appeared in mid-October, covered an 18-month period from April 2017 through August of 2018. In that time, the number of jobs related to both Bitcoin and blockchain grew almost every month, even as the Bitcoin price began to fall after December of last year. Most came from the crypto names, with Ethereum co-founder Joseph Lubin, Consensus, and Exchange Coinbase among the top players. So here's a nice chart showing this growth and how it's outpacing the Bitcoin price, which is good. This is bullish to me. Now, the last article, kind of showed you some key data points to look at aside from price in the crypto space as well. This one should for you too. But, again, these types of data points are going to be laggard as far as seeing price catch up to this. I think we did kind of overrun where, we were at 20,000. Maybe we should have 1,500 jobs being produced a month and a $20,000 Bitcoin. I think the market really got ahead of itself in 2017. So this is good, though. I think this is very good. Contrary to expectations, as of August 2018, there were more vacancies in the two sectors than ever before, even as Bitcoin fell lower and lower. As more employees become interested and invest in the technology, the professionalization of the space has accelerated as well, Glassdoor researchers said. Cryptocurrency prices began rising across the board in May of 2017. In that month, just 234 jobs were on offer in the U.S. Fast forward a year and a half, and the Bitcoin price was circling 6,500, around 3 times higher, yet the number of jobs had multiplied well beyond that figure, reaching 1,775 this August. Glassdoor also listed the top markets for the job openings, and those markets include, guys, New York City and Silicon Valley. Not surprising at all, right? So here's a list of blockchain jobs and cities here. So we got New York, San Fran, of course, San Jose, Chicago, Seattle, Boston, Los Angeles. Can we get a Detroit on here? No. That's all right. But what this article should definitely show you guys, infrastructure is being built. You know, those types of things are more inelastic, you know, when you're talking about creating jobs. So the demand for cryptocurrencies isn't going anywhere. It's just that I think the price got really ahead of itself in 2017. We're just kind of correcting towards something more normal. The markets are figuring out what that new normal will be for a while in this bear market. So again, if you guys want to really be about that crypto and blockchain, start you a business in this space or get you a job in this space. This is the future. I'm telling you, have your kids, they want to go to school, don't go be a web developer. That game is pretty much over. Go and get them into the blockchain with the focus on cryptography and blockchain. That's the future. AI, crypto and AI, that's going to be the future. So that's pretty much it though for today, ladies and gents. Make sure you guys like and subscribe, click that bell, share that video. Shout out to my man Chaos again for that song request. I'm loving it. It's your boy Crypto Blood, and that's my 2 Satoshis for December 3rd, 2018. Howard.